Hey guys, so what I'm going to do is I'm going to give you guys a little overview and explain the process behind all of this mapping here and why, for example, why is this here not a shift and why didn't you get an entry there after the initial mitigation, or for example, would you not consider this a chalk to the upside indicating a bullish market structure based on how I map structure. So I clearly want to just go over and map out, just explain how how and why I mapped up so and so. So first things first, up on a 4-hour time frame, as you can see here, we have this 4-hour huge wick rejection to the upside. And obviously when there's a huge wick like this is saying that we are rejecting to the upside, and obviously if the lower time frame starts to shift bearish as well, you can anticipate that the pullback is about to occur. Okay, now because price is obviously not close above this high, this low has become invalidated, therefore we refer to the previous low. So if obviously the trend was going to flip bearish, I'd wait for this low to get taken, and then obviously just look for shorts below that low there. But yeah, we had a wick rejection here on the H4. Now when we drop to the 15-minute as well, you can see that we had a nice aggressive shift to the downside. As you can see here, we had a nice shift there, indicating that we are potentially heading bearish as well. But we also took out some previous structure, which is also referred to as a higher low in the simplest format. Now again, I was looking at this breaker ideally for a potential entry, but anywhere from this area to ideally this breaker, when the M1 starts to give you an entry signal, you can pretty much look to enter. And obviously when price fills this big imbalance here as well, you can consider that mitigated also. But yeah, as I said, I was waiting for a pullback into this area, in which we did get. So I'll go ahead and show you the 1-minute time frame, and obviously because that's my point of interest, I'm going to drop to the M1, and that's what I'll do now. As you can see here on the 1-minute time frame, we have this pullback into this area. This is the first initial mitigation. Now, as you can see here, you're probably wondering, why is this not a shift? Well, it actually is, but you can argue that yes, it mitigated some previous imbalance, but also remember we use engulfing candles for our entry. So if we had a POI here looking to sell on the M1 time frame, we would be waiting for an engulfing candle below the previous bullish candle. So that's just an example of why and how the engulfing candles can really benefit you in that sense. Because obviously if you use the typical limit order, you're going to get stopped out or just lose the trade. So yeah, that's just simply why I didn't refer to this as the potential area of interest to trade from. I mean, I could have considered it when price came up into this area, but again, price did not engulf, so it became invalidated, and then we just continued the bullish trend. As you can see here, we have this newly high formed and this new low formed, and then price pulled back into this POI, and again we need to see a shift below the previous high low in this case, because obviously this is all bullish structure. So when a high low gets taken, and ideally a POI as well, that's when it becomes a higher probability to be looking for shorts. Okay, so again, another mitigation there of this POI, this demand POI, and then price moves bullish, taking out this previous higher high there. Now we then have a bit of a demand chain, because this is where the previous mitigation was, and also the previous mitigation here was here. So it seems like within this vicinity here is where the mitigations, are occurring pretty much, essentially, right? Also, you're probably wondering, well, is this your high or why isn't this your low? Well, because there's no imbalance within the range, so we refer to the previous low. But again, concepts are, people look at concepts as a whole, where or they get too fixated on a certain concept. For example, market structure. So for example, if you were to say, okay, price has shifted bearish here, let's look for sales here, you can, but it's very, very low probability. I'm not one to say what you can and can't do, because I believe any system or any way of trading works in trading with the right refinements. But yeah, this is not a shift just because there's no imbalance within that range, and obviously the previous mitigation was within this area. So if this POI got violated and then pulled back into whatever range it was, in potentially, if it did do that, then yeah, we can look for shorts after that has been taken out. So again, the key there is to ideally, yes, price take out the structure, low, in this case, and also the POI. Just to really confirm that, okay, demand is failing to hold, supply is potentially taking control. That's the way we view it. Anyways, fast forward price a little bit more. Obviously have this previous high, price then breaks this high, we have this new high, we follow price backwards, and we have this new low formed here. Now, as you can see here, price doesn't really come back into this area, we just continue to break structure. I don't know why I don't have this marked. I actually should mark that up. Okay, now as you can see here again, price obviously formed this high and low, price pulled back, but just sort of some, you know, mitigated this area there, didn't really come down into the range low area or where the previous mitigations were happening. And then from there, price had obviously shifted, not shifted bullish again. We had this new range high and new range low. The price came back down into this low and we wicked out this previous low. Okay, we pulled back into this area. Now this is a valid setup, but it's lower probability because again the previous chain is here, so the setups or the higher probability setups would occur after here. But you can take these setups with anticipation. Internal structure is gonna, well, not internal structure, but the structure is gonna shift bearish from here. That's fine. And again, you know, when you look at the typical shift to the downside here, it's not really a nice shift like you've seen here anyway. But price obviously took out that low minorly with this wick and then pulled back into this POI and then gave a nice engulfing there. So that's a valid entry to take, but it's more so lower probability as compared to this one. And then moving on, we see price shift to the downside here. We formed this new low and formed this new high, and then pull back into this newly formed POI. And obviously, again, this low is now taken out the previous, where the previous mitigations were happening. And if anything, we've just created some liquidity in this area for price to later take. So the shorts, or the higher probability shorts, would happen after that has happened. Okay. Now again, we pull back into this area. The engulfing didn't engulf this low. We could take it here, or the better candle here. And then again, we had this internal mitigation because price isn't, you know, this is the external structure, and if you avoid all of that price action there, this is all this external range high, external range low. This is all internal structure. Okay. So I mean, yes, you can, you know, take the internal structure here with anticipation of the external structure. Just be, it's probably better to have the stop loss above the external range high, okay, because it's more protected. And then again, we've seen a nice break to the downside here, forming a new range low and a new range high. Well, yeah, new range high. Now the reason, probably some of you aren't thinking, well, why is this not your high, or why is this not your high? And again, just going back to what I said previously, there's no imbalance within that range. Okay, and again, the whole idea of price breaking structure is to have an imbalance push to the downside in this case. Okay, and then again, we got a nice supply chain as well. So this is where the previous mitigations are happening. Price pulls back into this area and goes to the downside there. So if you had missed this entry, or if you had taken this entry, or even this entry, it's provided many scaling opportunities. And then as you can see here, price break structure to the downside again. We have this new low and this new high. Now, as you can see here, price sort of taps out the high there, but it also still stays within this previous mitigation. So if I was to consider the market bullish at this point, just based on the break, I wouldn't, because remember, chock or shift, however you want to refer to it as, is referred to as an unconfirmed trend. And when it follows through with a break of structure like it did here and here and here, that is when it's confirmed trend. But again, if I was considering this bullish, I'd ideally want to see, yes, price take out the high, but also take out and violate this previous supply zone, okay? Because then it becomes high probability to look for longs from that point onwards. Then from here, price just sort of more so consolidates, and then we just sort of get some internal mitigations that, yes, you probably could take, which is absolutely fine, like here, and, well, not here because price had obviously broken out the low. So moving on again, price has broken out the low here. We had this new range low, new range high. We then had this POI over here, and which price pulled back into. We came back up to this area, created equal lows, equal highs, sorry, and then obviously we had this nice engulfing, but it created equal highs, so there's liquidity there. But I mean, yes, you could have taken a nice sell opportunity off that engulfing with your stop loss above this area, and you would have still been in a winning position, because look where price is falling. It's a huge move. So yes, you can do that in that case. That's absolutely fine. And then again, as you can see here, price breaks to the downside again, and then we just sort of have this. I haven't really marked up any lows except over here, but we have this new overall low, because I mean, all these lows here, for example, like you refer back to, it still goes back to the same high. So this would be a break structure, yeah, but it's still the same high that is, you know, inside of the range. So this is a new low formed. Well, I'll just follow price a bit more precise. So as you can see here, price breaks out the low initially here. We break structure again here, but again, yes, the range high typically based on the 3 candles that I map would be here, but it's not, because there's no imbalance. Yes, price break structure here again, and then obviously, you know, well, when price broke structure down here and we have this new range low, we follow price back, we have the range high, again, no imbalance. Break structure here, we have this new range low, follow price back, no imbalance. Okay, so that's why we always want to refer to the previous range range high, you know, if there's no imbalance within that move in this case. And again, price pulls back into this area. This is a bit of a huge engulfing, and personally I wouldn't have taken an entry there. And to be honest, there was no imbalance swept anyways, so that's kind of lower probability to take a setup there because price seeks imbalance. And then price obviously came back up, took out this high here, so potentially trapped some sellers there that are trading off this, you know, shift in momentum there off that candle. And then we get a nice engulfing there, and then you could argue that, you know, you could have got an entry off here within this area as well, but personally I wouldn't marked it up. Well, I personally wouldn't have marked it up, hence why I haven't. But that's the sort of last entry there, and then price just there, so just keep selling off. And it's up to you what you want to do at that point in terms of managing the trade. You can manage it manually and, you know, close it when the lower high gets taken, or you can target the high time frame POI, which is here, or you can target into the high time frame low. It just depends really, but that's pretty much the thought process and how it all works, and inside of my mind pretty much of a trader and how I trade. But yeah, hopefully this video has made sense and provided a lot of value. But yeah, it's the little finer details you got to pay attention to. And again, the key reminder is to focus on all concepts, but not to focus on them individually. Okay, so just keep that in mind in future, because again, like I said, a lot of people will consider this, you know, a bullish break and expect a, you know, bullish shift and look to buy from potentially this area, but it's just not a bullish shift because the supply is still in control. So yeah, but like I said earlier, no matter where you entered, there's plenty of scaling opportunities there for you guys. So that's pretty much it. Thank you so much for watching, guys. Take care, and I'll see you all tomorrow.